Good day, my name is Christelle from Frans, the Klerk Independent Technical Analysts. This week we are going to kick off the show with Kumba. This is a share that treated investors very well from the January 2018 when the 40-week moving average represented by that red line changed into a support. Now, Kumba is currently in a breather or a pullback phase, and technically only when 446.56 Rand changes into a support again, can we assume that the momentum to the top will continue? And this bullish flag formation might be a hint that the share can reach for higher levels. A bullish flag happens when there's an overall uptrend, the share takes a little bit of a breather, and then when that upper band changes into a support again, we can assume that the momentum to the top will continue and the share can reach for a brand new 2-year high. However, the problem with Kumba is it had such a rally, or it gave such a rally, that this share is quite far away from its 40-week moving average, and that is only waiting at 335.31 Rand. So this will make it difficult for investors to decide when to take profit. So use the shadows on the candles or the strong support levels to identify resistance or support levels. And we can see that 400 Rand is a strong level. Another strong level here is 358.20 Rand, where the share found support or resistance every time it hit those levels. So technically above that 447, 448 level, we can see more upside, but below it, I would be careful. It's definitely too late to get in unless you want to do a trade on Kumba. My stochastic is not in ideal territory. It's here in no man's land here between a 60 and a 70. So I would rather sit in my hands and wait. Woolies was another one that was requested. And I mean, this share really struggles at the moment. The one positive thing about Woolworths is that it seems that it's trying to fight at least some consolidation phase here around 48 Rand. And it needs to continue to find support higher than where the previous low was. So in other words, this week here at the end of February, this low of the candle was low, and this one was a little bit higher than the previous low. So somewhere around here, Woolies needs to find to support in order for me to think that the share at least is making higher lows on the candles. However, what is a bit of a concern is this goodbye kiss on that red line, the 40-week moving average, where the share in the week of the 13th of May tested that level at around 50 Rand and retraced from it. And that can be a goodbye kiss where it says to investors, listen, I can't find enough buyers. I'm going to retrace to lower levels and see where other investors might find some support and buying levels where they're going to start to accumulate the share again. My stochastic is also pointing downwards, which confirms that the short-term or the 3-month short-term moving sentiment and momentum to the bottom is currently in place. I can only be optimistic about Woolies when the 48 Rand level changes into a support, and especially that 40-week moving average. I mean, to think that Woolies back in November 2015 traded around 106 Rand, and now you can buy it at 45 Rand, just shows you that every share and every market, every sector does have cycles. And people can use technical analysis to identify when a top is in place, when there's a loss of momentum, when a turnaround opportunity might be in the cards. And just like any other science or analysis that you use, it's not a perfect science, but you can use indicators to identify probabilities and possibilities and make informed decisions based on the risk and management and risk analysis that you have. Kumba Mining, listed on the New York Stock Exchange, is a share that definitely needed good risk management. And we currently have discussed this share on the show where we spoke about a possible higher low. And this dragonfly candle here that was formed on the 1st of April 2019 looked like a dragonfly doji candle. Why? Long lower shadow coming from a low base. But the following week wiped off all the optimism. And the share just continued to reach for lower levels. There's a saying that says, do not try to catch a falling knife. And I think that is definitely applicable in Kumba Mining. So the share needs to find support somewhere before, with a turnaround candle or a turnaround pattern, for me to think that there's a possibility that investors are finding value and are starting to nibbling on the share. At the moment, it's not there yet. Yes, the share is extremely oversold, but my stochastic is still pointing downwards. Those two moving average are pointing downwards. It's not a right time to enter this share yet. I think it was Stephen. Stephen, if you are currently in the share, make sure that you wait for a turnaround candle or pattern if you want to add to the position, assuming that you are using an average trade to get the share into a profit. If you did use a stop loss, and then you would be out and you would wait for the right time to enter again. Murray & Roberts on our local exchange is a share that is currently stuck in a symmetrical triangle. And a symmetrical triangle highlights indecision. It tells us that investors are not sure what they want to do with the share. A big concern is for the last 5 to 7 weeks, this share could not change that 40-week moving average represented by the red line into a support, and that is a concern. And take note how closely that upper band is to that 40-week moving average. And it can't manage to find buyers to lift that share above 15 Rand 12. And the other concern is if this lower band, this lower trend line that I've drawn in here, waiting at a 13 Rand 39, if that level changes into a resistance, it would be a concern. It would highlight to investors that there's clearly a loss of momentum, that the interest in Murray & Roberts are drying up. And the target of that symmetrical triangle, and I'm taking a conservative target because I'm taking the distance in the middle of the triangle instead of the tail. Some analysts even take the tail as a distant target. So I'm just taking a conservative target for the symmetrical triangle. And this can take the share back to 779 Rand. Yes, it's been more, this symmetrical triangle has been built for longer than a year. So yes, it can take another year before that triangle plays out. But this is the possible target for that formation. I would be careful to enter around these levels. I would keep an eye on that lower band. If that level changes into a resistance on a weekly close, I might consider making a decision on Murray's. Paul wanted us to look at DRD for a short-term trade, meaning I have to go to a daily graph to see and identify entry and exit levels. Paul, well spotted, sir. This level of 2 Rand 61 is critical. And for the last 6 days, the share tested that level, retraced. And this spinning candle here on DRD shows indecision. It tells us that the investors are not sure what they want to do with the share. But what is optimistic about DRD is this candle here. A beautiful possible dragonfly candle with this long lower tail tells me that investors were strong enough, the buyers were strong enough to lift this share price to higher levels, and that is optimistic. My stochastic indicator is nicely oversold. It's still pointing downwards. That's not good. I want the two moving average to at least find support on one another and point upwards, which tells me that I might have to consider a long then. And then the stop loss I can use is 2 Rand 45 or even 2 Rand 46, depending on how big you want to make your stop loss. But above this level there, around 2 Rand 61, the optimism would be on the table. A strong level that the share needs to overcome is this 2 Rand 95, 2 Rand 98, 3 Rand, in order for us to assume that the share can reach for higher levels. And we've previously spoken about that possible inverse head and shoulder formation on the gold price. So maybe, Paul, you've got the same idea as me about this possible inverse head and shoulder formation on the gold price. I want to go back to a weekly graph and I want to zoom out, and I've previously said this, but $1,357 is a critical level for me on the gold price, because we can see every time the share, March 2014, excuse me, not the share, the commodity, every time it reached July 2016, it reached 1,357. This range, massive range here between Jan 2018 and April 2018, when it reached those levels, it retraced. So that tells me it's a critical resistance level that needs to be overcome. So I am assuming that if the gold price can change $1,357 into a support, we can see another nice leg for upside on the gold price. What is a bit of concern is this 40-week moving average. That needs to remain a support in order for me to assume that the gold price can reach to higher levels. And I want to just highlight this possible inverse head and shoulder. And I know I've shown it before. But this gold price needs to find buyers. It needs to find support. And when this neckline changes into a support, in other words, it starts to consolidate above this $1,312, This inverse head and shoulder formation can take the gold price easily to 1,357 and even higher. So Paul, I think use those two Rand 61 on DRD and 246 as a stop loss, and maybe you also have this inverse head and shoulder formation on the gold price as a possible target or a trading idea or even a long-term investment idea. But I would use this 40-week moving average as my line in the sand, and that is waiting at $1,259. When the gold price starts to consolidate below those levels, I would be a little bit careful and use risk strategies to protect my capital.